Dr. Babasaheb Ambedkar Open University.
Hello dear friends and student, welcoming you in Dr. Babasaheb Ambedkar Open University in Chaitanya studio of Dr. Babasaheb Ambedkar University. Today we are gathered for the learning of financial statement, which is combined or which is approved in the subject called financial statement analysis as well as the financial accounting also. Block 1, Unit 2. Basically, what are the learning objective of this subject? This is most important. The first learning objective of this subject, this unit, is the purpose and objectives of financial statements. Then the nature of financial statement, the characteristics of financial statement, and the qualities of ideal financial statement. So ultimately, my dear friends, here we conclude with that what is financial statement and how it is analyzed and how it is produced before the government or any organization or by the law also. So in this journey, we begins with our study that from the introduction point. The government legislation requires certain organizations like limited companies, public utilities also, cooperative, to maintain proper account and draw a financial statement for the public and for ourselves also, for internal use also. So I can say that the financial statement is not only used for the external sources or external users, but it is also used for internal also. And thus, the public can understand from the financial statement the extent to which the company is discharging its social responsibilities while issuing share, bonds, etc. The financial statement becomes necessary as prospective investor can judge whether to buy the share or bonds. From the information regarding financial statement, or we can say that the financial accounting also, it assists the management in taking various kind of decisions. And the consumer overall, the world, are becoming and increasingly aware of their rights and are using financial statement extensively today to find out the degree of exploitation by the industries. My dear friends, here not we are talking about the uses of internal as well as external, but it is also used for the government also. The tax legislature makes it obligatory on the part of the business entity to draw a fair and true financial statement. With that, my dear friends, they have to define their financial statement as a true and fair view. The financial statement serves as an instrument to regulate equity and debenture issued by the company also. So my dear friends, here we discuss that the financial statement is important not only for the external user, but it is for internal use also important. And for that, my dear friends, various government legislations are there for preparing the financial statements in particular prescribed manner. Next part is what is the meaning of financial statement. And for that, my dear friends, you have to understand what is financial accounting. As we discussed in earlier unit, that is what is financial accounting. That advantages and disadvantages, all of the discussion done over there. So now you know what is accounting and how the statement prepared. The financial statement analysis is a judgmental process which aims to estimate current as well as past financial position and the result of the operation of an enterprise with preliminary or primary objective of determining the best possible estimates. And the prediction is also important about the future condition. So we can say that the financial statement is a judgmental process which mainly aims to estimate our current as well as past operation or past position to evaluate our future condition. So it is essentially involves the regrouping and analysis of information provided by the financial statement to establish relationship and throw a light on the points of strength as well as weaknesses of particular business enterprise, and which can be the useful for making any decision for a firm also, and to know about our present condition and how we move forward in a future by the period of time. So this is what, my dear friends, all about financial statement, the meaning of financial statement. Next point is, what are the purposes, what are the objectives of financial statements? The financial statements are very useful as they serves the varied affected group having an economic interest in the activity in the business entity. And for there, let us analyze the purpose of the financial statement. The first purpose or objective is that the basic purpose of financial statement is communicated to their interested users qualitative as well as quantitative and objective information in useful manner to make an economical decision. And secondly, my dear friends, financial statements are intended to meet the specialized need of conciseness to creditors and investors. Thirdly, the financial statements are prepared to provide reliable information about the earning of business enterprise and its ability to operate of future in a profit. Fourthly, my dear friends, financial statements are intended to provide the base of tax assessment. If you make a profit, but if you don't know the tax assessment, so how you pay the tax to the government or tax department? So you have to evaluate accordingly also. Then, my dear friends, financial statements are prepared in a way provide information that it useful in predicting the prediction of the future also, the future earning power also of particular industry or enterprise, or we can say firm or company also. Next is, my dear friends, financial statements are prepared to provide reliable information about the changes in economic resources and how that change will affect to your enterprise and it will directly affect to your financial statement also. Next is, my dear friends, financial statements are prepared to provide information about the changes in net resources of organization that results from profit directed activities. And for that, my dear friends, the financial statement stratified or satisfy the information requirement wide across the section of society representing the corporate managers, executives, bankers or creditor, shareholders, investors, laborer, consumers, government institution, etc. These are the financial information. Ultimately, they deal with that financial information. And for that, my dear friends, the financial statement is important for any business unit, any enterprise, any firm, any company, any government utilities, any public utilities, or any limited and unlimited company also. And accordingly that, these are the financial informations. From where we get the financial information? Executive also, trade creditors also, shareholder and prospective investors also, bankers also, laborers also, then consumers and society also. So my dear friends, these are involved in the financial information. Next is, sir, what is the nature of financial statement? The financial statements are plain statement based on the historical recorded facts and figures. They are uncompromising in their objective nature and trustfulness. They directly reflect a judicial or judications of combination of recorded facts, accounting principle, concepts and convention and a personal judgment also to make an estimation and to make a decision in a good manner for the future. Thus, the financial statement are affected by majorly three factors. First is recorded the facts. Second is accounting conventions. Third is personal judgments. So these three factors are important in financial statement, which are directly affect to your financial statement. And with that discussion, my dear friends, first is recorded facts. By the recorded facts, this means that the data contained in the statement which have already recorded in the past in accounting record. Say for example, cash in hand and at a bank, cost of fixed asset, also the amount due from the customer or loan, and the supplier also due to the supplier of the goods also. Then all recorded facts are directly represented in a numerically. Second point is accounting conventions. That is, financial statements are prepared by adhering to certain concept and established conventions. So, for example, my dear friends, if you charge a depreciation on fixed asset, then you have some basic concept regarding it and basic convention regarding it, and that's why you are deducting that depreciation from the fixed asset. So basically, if any accounting is majorly depend on the transaction also, event also, and that particular accounting standards also. And the financial statement is prepared according to that transaction, that event and that accounting standards. In agreement with the recorded facts, accounting concept, convention, all these things. The role of personal judgment and estimation and opinions are emphasized and especially when the two or more alternatives are produced or are available which acceptable are equality or equally. When you have the alternatives are there, then you have to choose the best option for you. So ultimately the personal judgment is also reflected on that point of time, okay, whether this particular opinion are important for me or whether second opinion important for me. So third factor, personal judgment is also affect to your financial statements. Next is, my dear friends, characteristics of financial statement. The financial statements are regarded as indices of enterprise's performance and position. As such, extreme care and caution should be exercised while preparing these statements. The financial statements generally reflect the following observation, the characteristic. The first characteristic of financial statement is that internal audience, or we can say the internal user also. So internal user is also important. Second is articulation, that is actually it's an art to record that financial statement is actually the art. Then historical nature, all the financial statement are based on the historical data. Then legal and economic consequences are there. That means you have to evaluate your economic strength also and legal requirement also, and according to that you done your business or you're doing well in that, and then you have to prepare that particular financial statement as law required. So ultimately you have to go to the economic dimension to the legal dimension also. Next is technical terminology like transaction, event, accounting standards and conventions, etc. Then summarized and classification. In accounting there is an important element, that summarizing and classification, both are important. But for that, recording also important, recording the transaction and event also important, then summarizing is also important, then classification of that particular transaction and event is important, and then after you make your financial statement. Then my dear friends, money terms is important, because all this done in only monetary terms only. Then valuation methods are different, so according to that you have to evaluate particular valuation method which can be the use in your financial statement. Such for example, like an inventory management or depreciation method. In depreciation you have to evaluate whether you go for the straight line method or written down value method. If in an inventory management, then you have to follow whether the FIFO method, LIFO method, weighted average method. So this all type of method is important for you while you are valuing your particular inventories or depreciation or anything else. So ultimately the valuation method is one of the important characteristics of financial statements. Next is, my dear friends, there's accrual basis. That accounting entries and all these things preparing the financial statement are based on the accrual basis. Then estimates and judgment. Most important is whether that estimation is good for you, the estimation is appropriate or not, whether your personal judgment are involved in or that or not, and then whether you have any question regarding adopting that method or change that method, that your judgment is also important for you also. So according to that, the financial statement must be characterized by estimation also and judgmental also. Next is, my dear friends, that is verifiability, that you have to verify your financial statement with all past recorded records, facts, figure, etc. Then my dear friends, the conservatism approach is also here suitable or existence with that characteristics of financial statement. So my dear friends, these are the characteristics of financial statements. The next point is preparation of financial statement. If I conclude it or divide it or split it, that financial statement, then it may be dividing at the trading account, profit and loss account and balance sheet, or profit and loss appropriation account also. But in a different business, there are different accounts are prepared over there. So in that, the financial statement consisting or consist of revenue account and balance sheet majorly. Revenue account refers to your profit and loss account or income statement, income and expenditure statement or account, or simply income statement. Revenue account may be split up or divide into the manufacturing account, trading account, profit and loss account, profit and loss appropriation account, and thus revenue account is prepared for a period covering a 1 year only. So my dear friends, here the financial statement is majorly dealt with what? That your revenue account, or we can say the revenue and expenditure and balance sheet. Now in that there is a one concept. The financial statement is prepared on the true and fair view. So now question is, what is true and fair view? If we are talking that true and fair view in layman language, then it is termed as you define your profit and loss statement in a true and fair view, that your profit and loss reflected or reflects the proper profit or loss as per your recorded facts and figures, which is mainly replicated or reflected in your balance sheet also, and thus your balance sheet mainly define your position of business. So the concept of true and fair view is one of the main concept to defining or evaluating the profit and loss statement and balance sheet as well. Next is objects of preparing revenue account. Manufacturing account is prepared to find out total cost of manufactured, or we can say the cost of consumed goods in a particular period. It will also reveal the cost of material consumed, labor, other manufacturing expenses or cost. This all are included in a manufacturing account or manufacture account. The trading account is prepared to ascertain trading result such as gross profit from sale or gross loss made on a sale of that goods. Then my dear friends, profit and loss account is prepared covering the same period to ascertain the net profit or net loss during that year, and under that review from the usual business. Then my dear friend, profit and loss appropriation account is prepared wherein all other items of expenses and appropriations are reflected to reveal the net profit or net loss. In generally, these are included that item related to earlier years or change of interest or salary payable to proprietor or partner, sole proprietor concern, partnership firm and companies have to prepare the above mentioned account. That means trading account, profit and loss account or profit and loss appropriation account. After completing this, the company, if the companies are there, then you have to prepare a financial statement or financial statement as per Companies Act 2013 under Schedule 3, that profit and loss statement and balance sheet only. Okay, my dear friends. So this is what actually done in that particular manner. Then manufacturing account, as we discussed above, that is manufacturing concern like preparing manufacturing account. In that, cost of cost of goods consume, labor, we can say the production expenses or fixed expenses to the directly go to the we can say the uh, net margin or prime cost and the finished goods. So these all are concerning with that particular account. So majorly the element of cost are enumerated under various heads like prime cost, factory cost, manufacturing cost, production account, various type of this that result in creating the finished goods, and these all are defining in manufacturing account. So in a business, the manufacturer account and trading account prepared majorly separately. Next is cost element, that is direct material, direct labor and factory or production overhead are majorly the important cost element for the financial statement, where direct material in a physical way directly affect to your cost, and without labor you cannot make any fixed finished goods. So labor is also the physical contact with the product also. The factory overhead, that is not assignable in nature, so different types of factory overheads are for that, like an indirect labor also, the indirect material also, that is a building composition, then supervision charges also, maintenance of factory also, then amortization of the patents also, then insurance on building. These all are combined into that production or a factory overhead. So these three are the majorly cost element for that. According to that, you have to analyze this whole lecture and you have to done this three assignment. We can say that the long questions, short questions and multiple choice question. The first long question is that discuss the nature of financial statement, then discuss the characteristics of financial statement. In a short question, you have to define financial statement and then define any two purpose and objective of financial statements. In multiple choice question, there are two majorly questions are there, so you have to solve accordingly. And if you want to refer any further reading, then you have to refer this all the books for the further reading also. So hope you learning well. Thank you very much for your attention.